Yeah, what's up, guys? Hope you all have had a nice Easter. Just a quick update on the portfolio. So we are still in the green. Portfolio value is $5,075. We have an unrealized loss of $93. So that means we have still some momentum and potential to get even more in the green if those trades we have already placed gets back to positive territory. So my largest position is still Tesla. I've been trading a little bit in and out of that stock lately. So that the total invested in Tesla is now $520. It's mostly because I'm very bullish now on the new FSD version 12 that they have rolled out. So the total unrealized loss in Tesla is $55.71. So in percentage terms, it's almost 11% down there. But still, I'm bullish that stock, so I'll probably continue buying a little bit more.
What? Bro, what are you talking about, man?
Now it's about roughly 10% of the portfolio value, so I have to also be mindful of how much exposure I would like to have in one stock. So, yeah. The next biggest position is now in Neste, and then Starbucks now is number 3. From the last video I recorded, you can see that the exposure to oil and gas companies have been reduced significantly. So now among the top 3, it's only Neste that is exposed to that sector. So if you look at the accounting for the trading lately, you can see that I've sold a lot of stocks, realized a lot of gains. That's basically that I have on most occasions just set trailing stop losses when I see that the stock is getting overbought. That's mostly based on the RSI. So for example, we can have a look at that E&I trade that I recently closed on the 5th of April for a total realized gain of $8.25 on one of the batches, and then $7.03 on the second batch, $40 each. And realized dollar profit is roughly $6 in total. So if you look at that E&I trade, you can see that it has lately been very, very overextended. So when you see that the stock gets very either overextended or it falls very, very below those medians, then you can expect the stock price at some point to snap back. In this case, since it is overbought, then we will probably see some pullback in the near future, and then the stock will at some point touch the medians again before it maybe goes up again. Another trade I can mention is the Aker BP. So Eni, that's an oil and gas company, Italian, and then Aker BP, that's a Norwegian oil and gas company. So if you look at Aker BP, you can see that we had this bullish RSI divergence and the stock caught momentum, and it has had a nice rally now since, since the end of February. It's been on upward trajectory and has now actually also breached all those exponential moving averages. First the 20 EMA, which is the blue one, and then the 50, which is the green, and then the 100, which is the orange, and then now lastly the 200, which is the red one here. So it still has some momentum potential to go further upwards, but now you can also see that the RSI has also moved higher because of the price action has also increased. So the RSI, it started off at in late January, it was roughly 30, so it was 30.02 on, for example, Monday, 22nd of January this year, and now it is all the way up to on Friday's close. The RSI is 67.66. So if it breaches the 70 level on the RSI, it is in general that it will then move into overbought territory. Going forward, I have now made a little bit more structure on the portfolio tracking capabilities. So I'm in Google Sheets, I think it is called. So that's pretty convenient because you don't really need any subscription.
This is my favorite one so far. Nice job, team.
So I have the portfolio value. You can see it started off on January 16th of $5,006. And then at the end of January, so you can see it went down by 0.43%, or in dollar terms, $21.63 down. So the ending value was then $4,984.7. So in February, we caught a little bit positive momentum, and then we then ended on a positive monthly return of 0.26. In dollar terms, it is $13.03 gain. We ended February with a portfolio value of $4,997.73. So the most of the gains has actually come in March. Since we buy oversold stocks, then it tends to be a little bit cyclical stocks. So in this case, it has been a lot of oil and gas companies, but now it has caught momentum, and then we have realizing gains in that sector. So that's where you can see that for March, it was a quite positive month of 2.2% was the monthly return in March, of a total US dollar gain of $110.04. So that takes our total portfolio value at the end of March to $5,107.77. And in this right chart, we can see the monthly returns in percentage terms. So realistically, with my approach, I think it is a little bit on the safer side. I buy stocks that are kind of like that already has had that sell-off, and then hopefully are returning back to positive momentum. So that I hope that means that I have less risk for drawdowns, since I not only identify stocks that are oversold, but they should also have a little bit positive momentum before I start to buy. So that's why ideally I would like to have that bullish divergence, RSI divergence, and then also oversold conditions based on the RSI and the price action. So in this case, like roughly around this mid-February would be ideal place to enter this position in Acre BP. So hopefully this will be something that will be profitable for me going forward. In terms of Tesla, it has had quite a beating so far this year, and we will continue to buy at these levels. We're very comfortable buying at the 160, 170 range right here. I can see some positive momentum once the revenue potential from FSD will be a little bit more clear to the analysts, especially the Wall Street analysts. Then hopefully that will also be more and more included in discounted cash flow models. So that's basically it, guys. Still continue to grind through with my given strategy. One criteria I have is that they need to have strong cash flows. They need to have positive cash flows. They need to have relatively manageable debt levels, because we are now in a very high interest rate environment. So it's important that the debt is manageable, positive cash flow, and then also hopefully on a growing scale. That means that net income revenue is constantly growing year by year. Means that the free cash flow should, ideally also grow year by year. But for now, since we are in a difficult macro environment and the general economy, I feel it's more shaky than what we can see in the statistics. Then I think it is most important thing for free cash flow now is that it is positive, and then that the debt level is manageable, so the company can sustain headwinds going forward. So the liquidity, solvency, and free cash flow, that's very important. In all my companies that I've been trading, they have those traits. So I think also that is something that can limit the downside risk in my portfolio. So hopefully I will never be back in the red in terms of portfolio value. At least then we will have a significant drawdown in the markets. That might happen. You see that the S&P, if I can just find that here, just to go and see, I can pull in the SPY. For example, that's the ETF for S&P 500. So you can see on the S&P 500, we have had quite a rally the last 5 months, from November or end of October, and then all the way until April. We had what a run, like 27% run. And now you can see that we have from end of January, you can see that it has formed a bearish RSI divergence, but the stock price increases. So when you see that the RSI is moving down, but the stock price goes up, that means that the momentum in this bull market is weakening. So I would not be surprised that going forward now that we will have some kind of pullback. It's way overdue. When it will happen, I have no idea. Will it happen? Maybe not.
Do me a favor, please. Get out of here.
But it would not surprise me if it does. So we can have, let's say, at least 2.5, maybe 5, down to this to this 100 or even the 200. So like a 9.5, 9-10% drop would not be abnormal at all. But that will be a buying indicator, I believe. So we'll just remain diligent. We still have a lot of cash available. So the total invested amount is $2,530, and cash available is $2,638. So we have a lot of dry powder to deploy if we get some buying opportunities. So that's it, guys. Please follow me also on X, where I post all my trades. So that's stock trading journey on X. I just wish you happy rest of the weekend, and catch you on the next one. Do you feel it in the air?